Welcome back to our podcast. I'm Francesca and I head up the payroll team at Seavor Chartered. Today we have with us Liam, one of our chartered accountants, and we have a new guest, Lisa, who's one of our account managers who heads up the management account team. As always, we'll just start off with a monthly update of general business. Lisa, would you like to start us off?
Yeah, so we're halfway to the tax return deadline of the 31st of January. So if you haven't already, if you get your information in to us at the office, the sooner that you get it in, the more time we've got to let you know of any potential tax liabilities that might be due.
Yeah, there's a lot going on, isn't there? I think one key thing what's just come out of the news for the last couple of weeks is the interest rates going down from 4.25% to 4%, which hopefully means cheaper mortgage rates, but also negative of savings interest. Probably going to see it going down a little bit. So it's just one of those things to keep an eye out and just make sure you're getting the best interest rates out of any products you've currently got.
Yeah. And as well, as of the 1st of September, there'll be the new 75 car registrations being released. And it's often a time that people, including business owners, start to think about changing the vehicles.
Oh, fabulous. Following on from your mention of that new vehicle release, that actually brings us to our topic today, being taxation of vehicles. I think the first thing we should definitely mention is the different classification of vehicles. Liam, if you don't mind starting us off on that.
Yeah, it's one of those questions which clients are starting to ask more regularly, especially with the new regs coming out in September. Sometimes clients think, it's straightforward, can get tax relief on anything, but it varies depending on obviously what classification. The way I look at it, there's two main classifications, cars, but also vans or commercial vehicles. When it comes to cars, probably the easiest way to identify them is, does that carry customers or does that carry customers and goods? If so, it's more likely to be a car, but if it's more just carries goods, preferably no seats in the back or anything, it's probably more a commercial vehicle / van. So it's probably one of those key areas to look out for, especially when it comes to picking what you want to buy in the future.
Is that okay? Yeah, it sounds like certainly a rule of thumb is if it's carrying people, it should be classed as a car. If it's carrying people and goods, car. If it's just goods, commercial vehicle.
Yeah,
that sounds about
I think
right.
one key thing to add to that as well is probably when it comes to the double cab pickups, because obviously them rules changed from 6th of April, so they're no longer seen as a commercial vehicle, it's more seen as a car. So if you're thinking about getting one of those, just keep that in mind that you're probably not going to be getting the best tax relief compared to what you would previously.
Yeah, certainly something to think about, isn't it? Because a lot of people like a double cab pickup, don't they?
Exactly.
Yeah, so when you talk about purchasing a vehicle, obviously there is multiple types and each type has different VAT and tax implications. Lisa, do you want to start us off on one of the types of purchasing?
Yeah, so some people, they purchase outright. If you purchase a commercial vehicle outright, you get the 100% tax relief in the period that you make the purchase. Same with the VAT. If it's a commercial vehicle, then you get to claim 100% of the VAT in the period that you purchased the vehicle. A little bit different for cars. It depends on the CO2 emissions of the car. So electric vehicles is 100% tax relief in the period that you purchase the electric vehicle. That's just for new electric vehicles. For second-hand electric vehicles, you have what you claim writing down allowance, which is basically you claim a percentage of the value of the car every year on a reducing balance basis. And the VAT on cars, generally not claimable unless it is 100% business, no personal use at all, and then there's no claim for VAT.
Yeah, when it comes to the rules around the 100% business, when it comes to clients, you should probably be a bit careful with how that's interpreted, because, say, for example, if it's available for private use at any point, meaning in the insurance and everything's got private use, you wouldn't be able to claim that back. But as long as it's kept at the premises overnight, keys are locked away, the insurance doesn't allow any private use, you would usually be able to claim 100% of that back at that point.
Yeah. So it's not available for private use.
Exactly
isn't it?
that, yeah.
Definitely something someone would have to think about
Exactly
if
that.
they were going to purchase a car then.
Yeah, it's definitely one of those questions where clients are probably asking more about pool cars as well. So you kind of just want to make sure it falls into that criteria before you go out and actually purchase it outright.
Yeah, certainly checking all them tick boxes, isn't it?
Exactly.
I know another type of purchase would be a hire purchase.
Yeah, hire purchase. It is similar in some aspects when it comes to buying a vehicle, especially for tax wise. When it comes to commercial vehicles, you can just claim 100% of tax relief of the cost at the time it's purchased. Same with cars. It's depending on CO2 emissions, as Lisa mentioned. VAT wise as well, it's very similar again. If it's a commercial vehicle, 100% VAT at the time you purchase it. But when it comes to cars, once again, is it a pool car or is it a private use car? At that point, if it's private use, no VAT claimable. If it's a pool car and qualifies as a pool car, you'll be able to claim 100% VAT back at the time of purchase. Yeah.
There's also some people do lease rental, which is slightly different as well. So on that, you claim you don't claim the 100% of the value of the car. You claim tax relief on the payments. And the same with the VAT, you claim the VAT on the payments rather than the actual purchase of the car. So on the commercial vehicle, on the cars, it's slightly different. You generally can claim 50% of the VAT back on cars, but it's on the payments rather than the actual value of the vehicle.
So in terms of a tax implication when it comes to lease rental, is there anything to consider there?
Yeah, so with the tax, again, it's based more on the payments. So the cost of making the payment for the lease goes into the profit and loss account, reduces your overall profit, and that's how you get your tax relief.
So rather it being on the full value, it's on the payment.
Yes, yeah.
That makes sense, yeah. I know one that we haven't mentioned is PCP, so that'd be our fourth type.
Yeah, and when it comes to PCP, it's very similar to hire purchase as you see it more as a capital asset. But when it comes to the tax side of stuff, it's varies. So instead of getting it on the actual vehicle cost, you're usually only allowed the depreciation for both commercial vehicles and cars. So instead of getting the whole 100% tax relief on commercial vehicles, you just allow the depreciation instead. Same with a car. Instead of the usual, depending on the CO2 emissions stuff, you just claim it on the depreciation. When it comes to the VAT side of stuff as well, it's kind of like the lease rentals where instead of claiming it at the start, you claim it on the monthly payments instead. So it's exact same. Commercial vehicles claim 100% of VAT at the time you're making that monthly payment. But when it comes to cars, very similar, claim 50% of VAT back as and when you make their monthly payments as well.
God, so it really is a lot to think about. Not only how you're purchasing, but again, whether it's a commercial vehicle or car, is that right?
Yeah, it's one of those things where if you do have as a client, if you do ever have a question or need help deciding what's the best root cause to buy or purchase a vehicle, just get in touch with us and we'll be able to tell you the best tax saving way to do it.
Yeah, and it's quite often best to do that before you actually sign into any agreements or anything, because it's not always clear, and the salesman won't always make it clear either.
It's not of their thought, is it?
No,
really? It's
no.
more of a business
So you
side.
might go into it thinking that you're going to get great tax relief, VAT relief, and actually you don't.
Yeah, definitely something to think about, because obviously on first glance it's like, what's the way I want to pay for it and what do I want? But actually it's not that simple, is it?
No.
So obviously not only does the type of acquisition matter, or the vehicle type, or the purchase type, but in terms of who is purchasing, as we go like towards sole trader, partnership, limited, I'm presuming that all affects it as well. Do you want to head off with that, Lisa?
Yeah. So for sole traders and partnerships, what tends to happen is that you put a private use adjustment through. So you're not actually getting 100% of the cost of the vehicle, because you have to adjust for any private use that you may use the vehicle for. And that just tends to differ just depending on each individual person, how much it actually used for business, how much it's used for business use. That affects the tax and also the VAT as well. So you'd make an adjustment for the VAT each quarter, or how often the VAT return is getting submitted. And you'd have to make that adjustment for the private use.
Okay. Yeah, it's somewhat similar when it comes to limited companies. So when an employee or director sees a benefit of using that car from which the company owns, usually a benefit in kind needs processed for them. At that point, they start to get taxed as that, as it's seen as income. When I say benefit in kind, it can vary depending on what vehicle you got. So when it comes to electric vehicles, it's usually more tax efficient compared to using a petrol or diesel car. But it's one of those things where you need to start to think for the future as well, because the benefit in kind percentages are increasing at quite a fast rate compared to usual. So say, for example, the electric one, I know over the next couple of years, it's increasing 1% every year. But to calculate that benefit in kind as well, it's one of those grey areas which clients don't usually understand. It's one of those things where they think it's on the purchase price of a car, but instead it's actually not. It's on the list price of that car. So you could be buying a car which is like 5 years old for 10,000, but the list price is basically how much that car would be if it was brand new. So instead of 10,000, it could be 20,000, and then at that point you times it by a percentage, depending on the CO2 emissions of that vehicle. And at that point it gets taxed by employee, but also the employer pays Class 1A national insurance on top of that as well.
Yeah, certainly something to think about. I know certainly doing payroll, and from that payroll point of view, you do see it where people think it's on one value and it's not, and it's on another, and it can catch them out.
Yeah.
Just suppose pushes them to buy new vehicles, really, which is what the government probably wants, isn't it?
Yeah, exactly that. Plus, when it comes to income as well, it's probably a bit of tax planning, which probably can go into that. Just make sure people aren't paying more tax than what they should be on it.
Yeah, there's definitely a lot to think about, certainly. I mean, before we come to a close, are there any business incentives that would benefit an employee? So, Lisa, would you mind giving us a bit of a brief?
Yeah, so it's worth mentioning that there's salary sacrifice available to employees for an electric vehicle. So essentially how that works is they sacrifice part of their gross salary, which has tax and national insurance savings for the benefit. Just a couple of things to think about, though, is that if you're going to be applying for a mortgage, your salary will be less because of that. And also, if you are close to the minimum wage, because it is reducing your salary, you have to make sure that the employee is still getting paid the minimum wage.
Yeah, I mean, I've certainly in payroll, again, I see that quite a lot, that some people think they can just sacrifice part of the salary, and actually you do need to do that calculation, because it can certainly catch the employee and the employer out in that aspect if they were to ever have something looked at. And obviously, as you say, the mortgage side of it, not something some people would really think about it, is it? When they're just thinking they're getting the benefit of the car.
Yeah, definitely, yeah.
Well, that sounds good, both. Thank you very much for your input today. I know it's certainly not something that's straightforward, like a lot of people seem to think. But obviously, it's important to think of what you're purchasing, how you're purchasing it, who's purchasing it, and how you're treating these vehicles when it comes to the business side of things. So if anyone would like any further information, please feel free to contact our office.